to Baloworld is a multinational corporation with a market cap of 18 billion rand, which owns a Caterpillar distributions in Iberia, Siberia and across Africa. It also provides car rental, fleet management and logistics solutions. It has a dividend yield of 2.4% and a price to earnings ratio of 14. So another one with a really high price to earnings ratio. So Barloworld sitting at 14. One to be getting into right now?
Interesting group. I mean, Punch Barlow, this is a group that was established like a century ago, and it was one of South Africa's sort of preeminent industrial holding companies. They bought a bit of everything. At some point they owned PPC or controlled PPC. They went global at a point, took their relationship with Caterpillar here, which is 75 years old, picked up the dealership in partnership with others in Spain, Portugal and then Siberia. But then they started unbundling stuff. So we know that they've reorganized themselves, they got rid of PPC. So now what you really have is two businesses. One is the Caterpillar thing, which is cyclical, let's face it. It's a function of mining sales and also construction and heavy earth moving equipment. And then another business which is also cyclical, which is the motor retail and sales, which are the two core units. And they got some other things as well. But as a result, become a rather cyclical and volatile stock in terms of its earnings.
Now looking at what Paul has just said, but let's just look at that logistics part of Baloworld. Your thoughts on that business?
So that business, it's not really a focus for this stock, really, because I mean, it's really part of the business to serve the rest of the business, like the equipment, and also still tied to very much to the cement industry when PPC was part of the group. I think the margins there are very low. It's been loss-making. They've recently combined it with their automotive group, so now it's automotive and logistics. So it's really not a feature to the stock, I'd say. It's an interesting read-through to the sector as a whole to see, if they're really struggling, is that something we can see from the rest of the sector? But in terms of whether this stock itself is a buy or not, I think that's really a small piece of the picture. I think, like Paul said, the main factor for the stock is the CAT distribution business, which is predominantly tied to mining sales, to mining capex.
Yeah. Now looking at the share price, Paul, rather volatile. Looking at it now, would you be getting into such a volatile stock?
That's the key question, because if you understand a stock is prone to earnings cycles, then first you've got to look at where the cycles come from. So you'd be forming a view, as Daniel says, of what's going to happen with mining capital expansion in Russia, mining capital expansion in Africa generally, and then you'd be looking at the Spanish housing sector, because if you own a CAT distributorship in Spain, then effectively you're selling it to builders, and we know they totally overbuilt their houses in Spain.
Yeah.
Since then, though, the recovery has come because it was too cheap down there in the middle. The CAT thing also, there's another part to it, which is mining equipment. They just bought this business called Bucyrus, or Caterpillar did, and then they pushed the distributorships out to their distributor partnerships. Caterpillar seems fairly happy with that model. But the question of whether to buy it now depends on where you see those sort of cycles going. And then you add on to that the cycle of the motor retail here in this country, and then maybe sort of chip in a bit for the logistics and a bit for the Avis business and so on. I don't know. I mean, my general theory about stocks that have very cyclical earnings is don't buy them ever. Not when they're looking good, not when they're looking bad, just avoid them entirely.
Okay, so are you heading to a
I'm
not
heading
hot
towards not hot, I'm afraid.
So not hot for Paul on Barloworld. Yourself, Daniel? Hot or not?
So I'd say that I agree with Paul in that you have to be careful of these businesses. I do think that they can represent good entry points to buy them if they're cheap enough. So in other words, never overpay for a cyclical stock. So Barloworld, it basically comes down to the next couple of years' earnings, in which you've got to take a view on the mining capex cycle. Now, from that point of view, we've got worries about China slowing down, we've got resource prices softening, we've got the actual international miners saying explicitly that they're going to cut down on capex. That's a concern for the stock. So at these levels, that entry point is not attractive enough to compensate for that cyclicality. So I'd have to say not.
So not hot on Barloworld.